It was a pretty eventful week for Bitcoin. We had some really, really good news and some really not so great news. But all in all, I would say it was definitely a good week for Bitcoin. Now, I will tell you that every day is exciting in an adventure, and because of which I do a show pretty much every single day. So hit the subscribe button so you can come along with me on my journey. And with that, let's get right into it. You've probably heard of this guy, Michael Saylor. Well, he had their earnings call yesterday, or was it Thursday or Friday of this week? And really one very interesting thing is that they talked about doubling their investment strategy to about 84 billion from about 42 billion. Obviously, you can't get more bullish on Bitcoin than Michael Saylor. And the MSTR, that's the Microstrategy's call sign for their stock, they announced a Bitcoin yield of about 13.7% in their earnings call and also a gain of about 5.8 billion year to date. So they doubled their capital plan from $42 billion of equity to another $42 billion of equity to make it $84 billion of equity, and their yield target from 15% to 25%. And so this BTC gain target from 10 billion to 15 billion for 2025. Again, you can't get more bullish on Bitcoin than Michael Saylor and MSTR. And MSTR has done amazing things. Let's just take a look at this right here. The 1-year return, 249%. Now that dwarfs that of Bitcoin itself, Tesla, gold, Meta, Nvidia, Apple, the Nasdaq, the S&P 500, Microsoft, Amazon, all of these things, Google, obviously. I don't know what BND is. I don't know why that's slipping my mind. But anyway, Microstrategy just crushing it. So it's fun to watch this pure Bitcoin play of a company really just explode. And Michael Saylor, I'll tell you, I've learned a lot from Michael Saylor. He looks at things he was the one that showed me that Bitcoin is the way. It's the only asset that he claims doesn't go to zero over time. Given enough time, your house will go to zero because the investment you make versus the money you put out, whether it be taxes, insurance, the cost to buy it, all these things, over time, it'd probably have to go past your death, but it will go to zero. Your money, cash money goes to zero because of inflation eventually if you hold it long enough. You have to hold it really long for your dollars to go to zero, but it will happen over time. Whereas Bitcoin appreciates and doesn't cost a lot to hold. So very interesting, interesting take on Bitcoin. But all in all, MicroStrategy is just doing really, really, really well. Now, here's the not so good news. Not so good news this week. Well, we'll start with the good news. Arizona legislature pushes for a state Bitcoin reserve. They passed it in the Senate. It went to the, and this was to put 10% of their public funds in digital assets. That was a big deal. They hold $30 billion in state managed assets. So $3 billion would have gone to Bitcoin. That's no small amount. This is just one state. But it went to the governor who said this: "Today I vetoed Senate Bill 1025. The Arizona state retirement system is one of the strongest in the nation because it makes sound and informed investments. Arizonans' retirement funds are not the place for the state to try untested investments like virtual currency." I think this is a little short-sighted, but I certainly understand the sentiment of this governor doesn't want to be the one that loses 10% of their funds. Now, Bitcoin is not untested. It's been around for, 16-ish years, so not untested, and the return it's had in that time is very large. Now, that being said, there's other things that are more tested like stocks, but individual stocks that they invest in might not even be 16 years old or very close to it. So with that, I would say this is unfortunate. It is bad news. It's not the end of Bitcoin, obviously. I just don't think Arizona wanted to be the first one. Whatever. Texas, Florida, and there's a couple others that are looking at it. I would love to see them move forward with something like this, especially in my state of Florida. I would love to see them invest in something that gives a high return. Obviously, they wouldn't put all their money into it, but this was an opportunity for Arizona to really separate from the pack, get ahead of all the other countries, companies, individuals, cities, states, and all these things, and be the first. Well, they failed at being a leader. They're just going to be a follower, and they're going to wait till someone else leads the way, and they're going to be behind. But neither here nor there. Not my problem. I don't live in Arizona. But with that, I will tell you the other big piece of news this week is Bitcoin. Now, Bitcoin was down here at almost 70, what was it, 75, 76, 77,000 just not even a month ago. It blasted up to bounce off the $85,000 mark, and it stood there for about 8 or 9 days where it bounced. It tested, and then shot up to 85 or 95,000. It tested 95 for 1, 2, 3, 4, 5, 6, 7, 8 days, and on the 9th day, it blasted through, hit around the 96.5 mark, went all the way up to 97, almost 98,000. It's testing 98, bounced back down. Today we're slightly down, but still, I mean, not doing terrible. We're above 96,000, 96.3, so still in a great spot. Now, if you look at the liquidation maps, it is possible that we're going to retest 92, maybe 93,000. I'd have to look at the chart. I could tell you better. That's on the 7-day. On the 1-day, man, not a lot of long leverage. People are starting to short, at 97, 98, thinking that it's going to test, bounce down, reclaim some of the long liquidity, and then it will race up and take some of those shorts if they didn't cash out. That being said, I look at this going, man, could we test that $93,000 mark? I mean, there seems to be a floor of support here. It's very possible before it shoots up. I mean, it might take out some of those long, or those longs, bounce up, take out what remaining shorts that didn't cash out. It's going to possibly bounce back up. Now, looking at this in history, it didn't really do that last time around. It bounced off this, pushed through. So, I mean, it just raised up. So if we follow this stair-step pattern, which, there's still a lot of things going on with the narratives around tariffs and the Fed meets on the 7th. Now, that could be our catalyst. Now, do I think the Fed's going to drop the rate on the 7th? I do not. Most of the those surveyed do not think the Fed's going to drop their rate. That they keep that target of 425 to 450 in that May 7th meeting. Now, here's another thing to look at. The price of crude. Now, again, inflation is what the biggest indicator is going to be for the Fed. How's inflation doing? Now, inflation is very much in line. It's gone down significantly, but the Fed's acting speculatively, thinking that the tariff narrative is going to be one that the tariffs are going to continue and the tariffs are going to cause, future inflation. So they're holding strong on their current rates and waiting to see if that happens. Now, the Fed doesn't typically act speculative. They are in this right now because it is kind of some not necessarily uncharted, but not recently charted territory. So they're biding their time to see what happens. Now, my prediction, and this is not financial advice. I'm not your financial advisor. I'm just telling you what I'm doing for my stuff. And my guess is that, and this is a guess, the Fed is not going to drop their rate on May 7th. And instead, they're going to talk about quantitative tightening. Now, right now, they're selling $5 billion of treasuries a month, down from $25 billion. And they're selling $35 billion of mortgage-backed securities. That's keeping the mortgage rates artificially high to curb inflation. Now, they are lazy. Damn it, I said it. The Fed is lazy because they're trying to be efficient. In keeping inflation down, one of the biggest costs in inflation is shelter, housing. And by keeping the mortgage rates artificially high, they're not going to have a slew of people run in to buy houses. If they drop the rates, there's a lot of people sitting on the sidelines saying, I want to buy a house. But they're not doing it because they perceive the rates as high. And historically speaking, in the short term, yes, rates are high. But historically speaking, in the long term, rates are low. That being said, the perception is rates are high, and there is a higher cost to higher rates to buy a house that's already inflated based on low rates. That was a mouthful. So they're keeping the rates high by selling their stockpile of mortgage-backed securities because, quite frankly, they have a $6 or $7 trillion balance sheet, and they need to reduce that if something really major does happen. They don't really have much firepower other than lowering the rates right now. So if they can keep that mortgage-backed securities selling, that keeps the price depressed, and that keeps the yield increased. So I think they're going to continue to do that, but they might use the proceeds of the sale, and this is insane, to buy treasuries, which would decrease the yield on treasuries and help Trump refinance $9 trillion of debt at a lower rate. Now, I don't know that the Fed is really going to help Trump or not because their main goal is inflation. Well, think about inflation or think about the dollar weakness if we have to refinance $9 trillion of debt at the current rates versus lower rates. It's insane to think that we have $37 trillion of debt and we really need to decrease that. And so we have to decrease our debt. We have to spend less, even though the last bill, as pointed out by someone, was higher than this last year, but we have to work towards cutting our expenses if we want to move forward. All right, so long story short is that I don't believe the Fed's going to drop the rates. I do believe the narrative is going to be completely around the quantitative tightening reduction. Quantitative easing means we're just buying. Quantitative tightening means we're selling. And I don't know, I mean, we could do a mix of both. I've heard we're going to sell mortgage-backed securities and buy treasuries. That would be very interesting. But the language could be the market mover that moves this up or, quite frankly, back down. That's what I'm worried about. But I believe there's so many other narratives out there. The tariff narrative is coming, I wouldn't say to an end, but to some resolve. I mean, there is talk of talks between our government and Trump and China through back channels. I do hear that they're talking about how China's asking Trump, what do you want us to do about fentanyl? Well, here's what you can do. Stop sending the precursor chemicals to Mexico for the cartels to assemble so that they can pump fentanyl into our country and continue to kill more people. Yes, I believe that our country has a problem with drugs and we need to figure that out at a country level. But yes, it would help to have less fentanyl coming in, killing our people. That would be nice. Is it retaliation because of the opium wars? I don't know. But what I can tell you is China has they have complete control over what gets sent out of their country. I mean, they're a communist regime. Tell me otherwise, I'll laugh at you. They're a communist country. They have control of what they send out of their country big time. If their people don't listen to them, they just straight kill them or incarcerate them. Not a lot of due process there. So look, they have control over that. I hope they stop sending the precursor chemicals. That would help lighten up the tariffs. And quite frankly, China's already lightened up the tariffs. Trump's plan to some degree is working. They said they'd come to the table as long as they don't, get a bad deal. Well, that's up to them if they accept the deal or not. Any deal we make is going to be better than the deal we have. So I'm very happy to hear that for our country and even for China, for both of us. That being said, India is looking to replace China, and Apple's already inked a deal with, from what I understand, rumors with India to produce their products in India versus China. Smart. Okay, good. We're decreasing our dependence on China. China did this to themselves. Or did we do it? I don't know. Don't care. Don't want to get political. But that being said, price of crude down. Fed not going to drop the rates in May. I'd be surprised if they did, and that would be a shocker that would send the markets just screaming. This past week in the economic data, some very cool economic data. We have unemployment or employment was not as great per the ADP, but initial jobless claims were higher than expected. But non-farm payrolls did rise. A lot of conflicting payroll data, okay? Inflation data, core PCE down, less than expected. That's good. PCE slightly higher than expected year over year. PCE month over month, as expected. Hourly wages down just a bit. That's actually good. Price wage spiral. If you raise your, let me start over. If unemployment is super low like it was, then it's going to be harder to hire people. If it's harder to hire people, you have to pay them more to come to work for you. If the government pays more than the private sector, you're going to stay on the government's teat for as long as you can until the government says, okay, no more, you got to go get a job, which they didn't do the last 4 years. And so the government, if they're paying better than or close to what the private sector pays, private sector is going to have a hard time paying these laborers. So if the government slows down those incentives to not work, and you have a raise in unemployment, well, that's actually a good thing, because if companies have to pay you more to come to work, they have to raise their prices, and by raising the prices, they have to pay you more, and there's a wage price spiral, and that's what happened the last couple of years since COVID. Really, We sent people home from work from COVID. We gave them stipends to be at home, no incentive to go back to the workplace. They weren't even included in the labor numbers. Then you had a 3-point-something% in unemployment. We constructed that, and that caused us to have to raise prices. The other thing that caused us to raise prices was the cost of oil. The cost of oil has come down about 30% in the last couple months. It's come down from, it was down at 80% to 58%. You do the math. What is that? 6, 8, 3/4, 30, 25%, about 30%. Close to 30% in the last since Trump took office. And that has allowed prices to come down significantly. It's all been about the price of oil and the price of labor. Those are the two biggest things that are involved in almost every single transaction, goods bought and sold. And until the price of oil and the price of labor came down, or at least stopped rising, prices weren't going to come down, and we continue to have inflation. Now those are in check. The tariff is the thing that the Fed's really looking at to say, once that comes down, once we see the tariff narrative come back down and the fears around the tariffs subside, even though the markets have already rebounded pretty much, then you'll see they'll lower the rates, pump the markets, and lower rates are good for everybody. If it costs me less to borrow money, then my monthly expenses are down. If it costs me less to fill up my gas tank with gas, then I have more money in my pockets to spend, and I'm not complaining that I don't make enough money at work as much. And then the raises and the overpaying slows down. Now, I believe people should be paid a fair wage, but I also believe that if you want to make more, you got to do more, and you got to get off your ass and do it. That's easy for me to say. I understand people are going to give me a hard time about that comment. It is what it is. I said what I said. Now, that all is just to wrap it up. Sailor, doubling their purchase, raising their Bitcoin from 15 to 25% for this year. And they're continuing to buy. He said he'd continue to buy and continue to buy. You have Arizona vetoed their legislation on the first state Bitcoin strategic reserve. You have Bitcoin busting through that $95,000 mark, pushing ahead, a little bit uncertain. We're going to see what happens on May 7th with the Fed. If we get a surprise to the good or the bad, expect a lot of volatility in the next week. We had some good economic data, some bad economic data this week, some mixed data, but all in all, it's looking good for inflation coming down, prices coming down, the cost of oil coming down, which would put more liquidity into the markets and hopefully pump Bitcoin back up. That is all I got. I hope you got something out of this. If you did, hit me a like down below, and I'll see you next time.